Hello, YouTube. There is a massive trap being set, and we're going to talk about that today. I'm not sure whether it's a bull or bear trap, though, so please make sure to smash that thumbs up, please, and thank you, and drop me a comment because I always enjoy all the engagement, and I would love to know what you guys are seeing from here. Right now, we had our CPI print coming in hot, and Powell is going to be coming up next. So what's really important is that we are now all the way here at December 13th, and we've had a lot of data to digest. And then we want to ask ourselves where we're going to go from here. There is a lot for us to go through. And what I want to note is that these videos have been getting longer as I look at them because there's just a lot of stuff we need to review to make sure we understand what the market is doing. So what I want to say is that right now it is a difficult time. This is currently professional time, which means that it is hard. This is a hard trading environment. This is difficult. It is not easy, even for me. Remember what we talked about yesterday where do you want to be right or do you want to make money? And that's really what I want to talk about here. I think Mike Tyson said it best. We're going to look at that in a moment, but it's everyone has a plan until they get punched in the face. And I think both teams got a punch in the face today, the Bulls and the Bears. Why? Well, because we went full circle. Just before the CPI print came out, which was lower. I don't think it was like, hey, we should have had a 4% rally day, but hey, who am I? I'm not Mr. Market. And now when I look here, I note, okay, well, here's where we were just before the print came out. That's where we were after it closed out. This is where the market opened because it's the E-mini futures. And then we came all the way back down. So we went pump, we went dump, and now we're right back to where we started. Isn't that so interesting? Yes, it is 100%. And I say that because as I look here to the pattern, and we're looking back here to when we formed our bottom, I find something on the volume, which is actually very interesting. That's different from the from the price. When we look back here in time, I'm going to go back to when Jerome Powell spoke. There is only one day where the biggest bar on the day is actually red, and that is on December 1st, which is the day we had that big power slam, which led to the decline. So is there something similar forming here? Well, let's just ask ourselves. We got one incredible hour, and then we're kind of done. So looking here, green, green. Even on the decline. So as the E-mini futures are going lower, the biggest bars are green, biggest bar green, biggest bar green, 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 green. Today we broke the pattern. Today the biggest today the biggest volume bar is red. So is that the start of the weakness? I don't know. But as I look here to the chart, I think both teams are going to find what they want. The Bulls are going to say, hey, we closed out green. We destroyed 410 on SPY. We printed a new high of the month. That is something to celebrate. That is victorious. That is beautiful. That is sexy. And they're going to say that we also tagged the 50 weekly moving average. And this is where things start to get a little bit more complicated because SPY, SPX, and the E-mini futures all tell us different data. If we look here at SPY, yes, it did tag the 50 MA, which is currently at 409.41. It tagged it today. Actually got over it by about 1 point. However, what if we look at SPX, which is actually the index, not an ETF? SPY is an ETF. Well, we got really, really close within a whisker. 4103.75, our high of the day, 4100.96. So we did not actually test this area. Here's where it gets even more complicated. Let's look at the one-day chart. Okay, well, it looks like SPX is closing right here on the 200 DMA. Let's look at SPY. It's closing right on the 200 DMA. But now let's look at the E-mini futures. Oh man, it's like we're closing a little bit over. We're a little bit over. Why? Well, it's funky time, right? So like right now we can note the E-mini futures are up by about 0.9, Nasdaq's up by about 1.23, sorry, and the S&P is up by 0.76. QQQ is up by 1.1 basically. So this is where some of that decay is starting to factor into these different charts. And again, we generally look at SPY, but the better one to look at is actually going to be SPX. That's where there's more volume. This is the actual index. It's not an ETF. And what do we note? Well, we got a red bar here. And I think that if we're trying to understand the pattern which is formed since we went to the bottom in October, we want to see whether or not there are signs of exhaustion. Is this an exhaustion gap? It sure looks like it in hindsight. And we talked about this yesterday. I'm not going to talk about that anymore. But if you would do me a huge favor, I would really appreciate if you could smash that thumbs up. And I also want to say this before we go further. I want to actually mention this at the beginning. I'm going to say that if you're watching the video today, I want to make sure you know that this is really difficult. Like I mentioned, this is professional time. It is so hard to trade right now. This tape is violent. It is nasty. It is trappy. And it's not even over, right? We got to deal with Jerome Powell tomorrow with the Fed decision. Then we got the ECB. And then we had Binance pausing withdrawals after $3 billion got withdrawn. FTX was in court today about criminal fraud conspiracy. The man was arrested. Man, what's the dominant headline for the day? It's almost like we forgot there was CPI that even came out. So again, one more time, let's step back, let's catch our breath, and let's make sure that Justin leaves you with a positive message, because I think it's really important you understand that if you are watching today's video, it means you have the desire, you want to succeed. But if you don't know your why, meaning why do I show up for work? Do I want to be right, or do I want to make money? This could be like really hard. So what I want to leave the audience with today is a message that if you are showing up, watching YouTube videos, it means you have a desire to want to get better. You need the grit to power through when the going gets tough. When the tough get going, when the going gets tough, the tough get going. When you get punched in the face, what do? Everyone has a plan until they get punched in the face, right? Man, pretty safe to say both teams got a punch in the face today. But if you're watching this end of day video, it means you have the desire to want to get better. And just know, I've been where you are. I was on a losing streak for 5 years. I lost money for 5 years before I was successful. And then only after I got humbled over and over and over, and there was a lot of time, that is when I finally found success. It's when I finally admitted that maybe I don't know everything. And if you remember, yesterday I mentioned that I don't know which way we're going to go. I do not often say that. I often generally have a lean. And we talked about this in our private group yesterday. I said, I'm looking for about 402 once buy. Why? I was looking back to my 2008 pattern, but now we have history repeating itself. Sorry, not repeating itself, but it's rhyming. And what I want to try to do is provide you with a little bit of context in regards to why I've been so confused lately. Is because I'm still pretty bearish, but I don't like being on the wrong side of a trade, which means I was bearish when we were going into here. That doesn't mean I'm fully loaded up to the tits, like I mentioned yesterday, and you guys seem to enjoy that. What it means is that I'm willing to understand that there's points in the chart at which I'm right and points in the chart at which I'm wrong. And right now, with the uncertainty of Powell, I think there is the same potential for tomorrow to have a punch in the face. And I say that because when we look here to the poll we do on the weekend, thank you to everyone who votes on these, by the way. We had 1,000 people vote, and they told us that next week or this week, stocks had a 63% chance of going down, according to votes. And the last time we had a number over like 59 was literally right at the bottom. It was on October 10th. So if we go back in time here, again, big thank you to getting us to 2,000 subs about 2 months ago. Really appreciate that. Here we go, right? Yes, up, down, flat. And that's because we had the flatten here. This down would be a lot higher on October 10th. Remember when that was? Oh my goodness. That is literally right at the bottom, the week of the 10th. And what happened? Big boom town, baby. Booms, booms, booms. And I don't think people were receptive to it. That's when I was starting to call for the reversal. And now we're right there. We're over 60%, but we removed that flat window. So 2 and 3 people think we're going to go down. But did their stops get blown through? Are they so timid or shy now they're not going to get in? Man, that's the question. So let's look back to October and try to see if we can understand what's happening here. Also, what I forgot to mention earlier is that if you're looking for someone to give you guidance during the day, especially into tomorrow, you can come trade with me from Justin from YouTube. And we're going to be streaming live through Jerome Powell speaking tomorrow. If you're looking for guidance on that, you can go to thealgo.com or just watch till the end of the video, and I'll talk more about that at the very end. All right, so if now we understand that back in October 10th, that's when people were looking for us to go dramatically down. And now 2 months later, we're basically right back here. 2 out of 3 people think we're going to go down. So they were probably really positioned for it yesterday. And they might have missed something where we have our pop, flag, but mostly sideways, pop, sag. Pop, sag. But what I want to note on here is also that we had a green close. Sorry, the volume screen, and that's just because we're using full candles. If we go hollow, it's going to turn green. But the reason why this is turning red is because we closed lower than we opened. That has not happened since the October bottom. So is this time different? Is the third time a charm? Man, that's like a tough question. We're only going to know that in hindsight. So let me tell you that there might be signs of exhaustion because we close right near the high of the day, regardless of what happens after that one day, right near the high, right? Where's the next pop here? Next pop, right at the high. Next pop here, right at the high. So even if it sagged, we were able to hold that high. But today, we gapped up massively. We gapped up so big. It was like a 3% gap on the chart. If people were not positioned or if your stop got blown out, that's what they want. It's exactly what they want. There's OPEX on Friday. So OPEX or options expiry. By the way, now we get the privilege of potentially losing 5 times a week. There's daily expiry now. 0 DTE happens every single day now. So 400 on SPY or 4,000 on SPX is still going to be that max pain area. So are we going to go full circle like we did on E-mini futures for the 1 minute chart? Well, let me just show you something here. And the reason I'm doing this is because if we look at a line chart now, you might be getting a different perspective on what we note here. So what I'm seeing, it's very obvious to me. If I exclude the opening price, I see a nice head and shoulders here with the 200 as clear resistance. Okay, cool. Is that an easy story to follow? For me, it is dead simple. On a closing price or a line chart, we have this. SPX did not tag the 50 weekly. I think it's gotten close enough to say it is, but SPY, if that's all you're looking at, can provide a false signal. So for now, looking to what happened here, the signs of exhaustion are here. So we pop, continue, right? Where's the next pop here? So pop, flag, pop, sag. So pop, continue, pop, flat, and then pop, sag. And now we gap up flush. That is what the signs of exhaustion look like. And if you look back here on the 1 hour chart, I'm going to go back to the E-mini futures just because it includes the pre-market session. Let's go back in time here for quite some time. Well, let's just go back to the recent period I was looking at here. So looking at the volume, there's not very many days where just going back here to the last Powell pump when we had that pop and sag. So pop and sag where we didn't just retrace the full Powell pump. We retraced even more. And right now, we've actually only retraced the actual the CPI pump. So if we're going to repeat this pattern, and the pattern was, well, on the first day, when we get a red bar that's bigger, that's when we form a short-term top. We do more than puke up the whole move. But the really tricky part here is that where we started our pump was right here at 40.50. So we've come back down. Did we finish already? We're in a game of chicken right now. Which team's going to blink? And it's only Tuesday. OPEX is Friday, which means we got Wednesday, Thursday, Friday expiries to get through. This is going to make it increasingly difficult. So let's go now to SPY, which is what we normally look at. And I want to remind you one more time. The longer these videos get, it's not because I have more to say. It's just because there's more for us to review, to legitimately understand what the market's doing. Knowing what's happening, it's different than making a plan. The saying I like to use for that is very simple. It's called plan the work and then work the plan. This sounds simple. It sounds easy, but let's pretend that you planned the work today and then it didn't work out, because that's where probably the majority of people are. I know, because I have my different sentiment gauges and even just my own internal sentiment. I walked away from the screen today because I didn't feel like I was in an emotional state to actually make the right decision. So here's the hard part. You plan the work, you put your stop in, and then what happens? You go to work the plan and it just blows through it. Whether you're bullish or bearish, man, was it hard today? And you do all the work, and then what? You get punched in the face, right? So you do all the work, you get punched in the face. You might ultimately be right, or we're going to go down, but being wrong, even for a couple of days in this market, can mean an eternity. So what do? We got punched in the face. Now we want to try to find out what to do. That's really the big question here. So if we now go to our normal boards to see what is really happening, let's just clear these things out of the way. Let's look at the, so again, this is the quote I really want to leave you with. What are you going to do? You're going to lie down? You're going to quit? You're going to fail? Come on. That's why you guys are watching these videos. You're watching because you have a desire to want to get better. Having the right intentions does not always mean you get the results you want. And if you show up for work and get punched in the face, that only happens in the stock market. You put in all the homework, have the right plan, have the right thesis, respect the risk by putting in a stop. Man, you leave with less money you started sometimes. That might be you today. If it is, I really want you to hear the message I'm sending, that there is hope, there is potential, but you need to stick with it. You have to plan the work and work the plan. Why? Greed is still high right now. Both teams are getting greedy. Who's going to win? Let's find out what Jerome has to say. So these numbers were encouraging today, but instead of listening to what Justin has to say about inflation, let's just defer to the big man. Let's just defer to Jerome. Let's see what he has to say tomorrow. He's going to tell us. You don't need me going in there and adding my 2 cents to mansplain why it went down. It's red. So that's all that matters. Red data is what we're looking for. And for the rest of the week, there is more data. Encourage you to go to investing.com if you want to see it. And then again, for me, I'm like, whoa, no one's even really talking about this. They're all talking about inflation. Man, $3 billion withdrawn. And Sam Bankman-Fried, he's now again, he got charged with fraud and conspiracy. He's been arrested in the Bahamas. And this kind of seems like it's a black swan, because this man, who was the guy at Enron, he said this is worse than Enron. And he used to be the CEO of Enron after it blew up. So this is like looking increasingly more and more potential for contagion. And I don't know where we're going to go. All right, so let's start wrapping up, because I think that a simple message is what we want to leave people with today. A simple message saying that it appears, keyword being appears, like there is signs of exhaustion. And the fact that we're getting some false signals, like here it shows us that we close below. On SPY, we close below the 200 daily. On SPX, we close below. On the E-mini futures, we close above. And again, to add more complexity, we poked over the 50 weekly on ES. On SPX, got really close within a whisker. And maybe if we slam down, that 50 MA will come down to 4,000, or sorry, 4,100 later in the week if we get a power slam. But for now, it got really close, but it did not tag it. It might get revised lower in hindsight. So depending on what chart you're looking at, you might be getting a different story. So let's keep it really simple. The simple story is that on QQQ, we did form a higher high. We formed a higher high here. If we now go to a line chart, the story gets a little different though. Well, we got like a head and shoulders here, and it's not even at 295. It's at 288. Yes. So I don't know where we're going to go tomorrow. That's why at this point, I'm going to react and not predict. I have my long-term investments on, which are either going to hit their stop or hit their target, and I'm just not going to touch them. But for here, if you want to trade this, man, you better be ready for the chop. Whatever happened today, I think people are either going to be trying to make up for lost time tomorrow, or they're going to be gun shy. Why? Been there, done that. Again, trust me with experience. I've seen everything. So if every time we were unable to penetrate this downtrend, but now this time we gap over it, is that a claim? Well, no, it's not. It's a violation. It's not a claim. So if we now flip to the same line chart, man, if you look at a line chart on a closing basis, we didn't hold it. We missed the 50 MA by about 53 cents. We didn't close over the downtrend, but we tagged it. We touched it. We violated it. So that's what I mean. I don't know which team's going to win. I don't know where we're going to close tomorrow. And you're probably like, man, why are you saying all these things you don't know? It's because I've been humble enough time, like I told you, over 5 years, that I know what I don't know. I know when I have an edge. And right now, I don't feel like there is a psychological edge. I need to hear what Jerome has to say tomorrow. So what he says tomorrow, we already know what the right decision is going to be. Let's be honest. Let's hear what he talks about at the press conference tomorrow. They're having day one of their meeting today. They conclude their meeting tomorrow with the summary of economic projections, the interest rate dot plot, and then also the press conference at 2:30. So that's going to be about a hour and a half from start to finish. And we're going to be there live to stream through the whole thing, to try to understand what's happening, and then to try to help you to be prepared for it. So I'm going to leave you with a message of hope, whether or not you decide to be in our group, join us for a free trial. I want to make sure you hear the message that it is okay to be wrong. It is not okay to stay wrong. If you've now gotten a punch in the face, whether you're on Team Bull or Team Bear, please just do not flip-flop to the other team. That's called revenge trading, where if you, well, if I can't make money going long, I'm going to go short. They stopped me out, so now I'm going to go short. Got to go big short. That's called revenge trading, where you feel like the market owes you something. It does not owe you anything. These are whales who are fighting here. How do I know that? Remember Ray Dalio, the guy who had a 30% green trade, who's now flat? Well, he's probably red again. There's probably big guys fighting it out there. And all this positioning going into Powell, Today, it looks like an exhaustion gap. What's it going to look like tomorrow? Take your pick. Drop me a comment. I love reading what everyone says. But otherwise, if you want to trade with me, Justin from YouTube, and you want to see how we tell you what happens on YouTube, but then formulate a plan and then actually go and buy stock, that is what you probably want. We have a help desk. You can see you have access to me every single morning for a pre-market stream. We're going to do the educational stream tomorrow with Powell. And all that good stuff. If that interests you, fantastic. We would love to welcome you. If not, thank you so much for watching, and I look forward to seeing you tomorrow. I wish you all the best luck tomorrow. Please be prepared. So I'm going to leave with one more quote. Sorry, I have to. Why? Because I wish someone would tell me this when the roles were reversed, and this is what I need to hear too. So expect the best, prepare for the worst, and be ready for a surprise. Why? Let's go through each one of these really fast here. So I need to remind myself this right now too. So let's make this font as big as possible. Let's boom it up to 40. Expect the best. Expect that you have a winning strategy. Expect you know what you're doing. Expect things are going to go your way. But be legitimately prepared for the worst case scenario. What does that mean? For me, it means my stop gets hit. It means my ego is going to get a crush. I'm going to have a fixed % loss, and I know exactly what's going to happen. That's the worst case scenario for me. The being ready for a surprise, that's the tricky part. The surprise today was like, man, if I exercise my proper risk reward trade mechanical trading today, I got in before the report. I closed the day out green. Who cares though? I'm just some person. For you is what you care about. What's going to happen for you? A surprise for you might be that they hunt your stop, bullish or bearish, and then it ultimately goes where you wanted it to. Or you watch a stock gap up 10% and then you chase it. That's the surprise. Or that it fully flushes, or whatever else. So if you get that punch in the face, but you've done these 3 things, that is the toolkit which will give you a better fighting chance. Again, if you're fighting Mike Tyson, you're probably going to lose, which means when you're fighting these market makers, don't expect to win. But with this simple winning strategy, I think you might be starting to get some final traction to the upside. So very long video. The length of the video should tell you that this is professional time. If you're not a professional, maybe sit on the sidelines tomorrow, watch what happens, and then trade the fallout. And if not, if you want to see how someone like me trades this, come join us. We would love to see you. If not, wish you all the best of luck, and we will see you tomorrow. Thank you again.